G'day folks, welcome back to Pete's Investing. It's January 16, 2024. This is the natural gas commodity price and ETF update. We're in a medium-term neutral positioning on the commodity price at least. The shares haven't changed much, but I'll cover the ETFs and the shares also. First off, on the natural gas commodity price, you've got here the weekly, daily and hourly, and on the weekly we're still pretty much moving sideways on our CCI 400 indicator, which is our trend indicator, and the CCI 150 hour divergence indicator is showing no divergence at the moment. Again, just for those new to the channel, there were a couple of divergence back here, bearish divergence, and the price did fall off according to those, so always keep an eye on those. On the daily, that's somewhat neutral to bullish. You see the CCI 400 is broken above its moving averages, and again there's no divergence on the CCI 150. On the hourly chart, you can see here since our last update it's actually gapped down and sort of currently hovering around this 2800 level, and it's sort of taking its time, but notice on the CCI 400 it's trending to the downside, and again no sign of divergence on the CCI 150. There were a few divergence back here, bearish divergence, and they did pull down from those divergence and executed nicely. We'll cover quickly the ETFs. This is a ProShares Ultra DJUBS, which is the ticker BOIL. Again, no change since our last video, but just basically it's moving sideways to somewhat bullish on the weekly, bullish on the daily, and also bullish on the hourly, so just be mindful of that. And that's a response of this bullish divergence back here. It's bounced up from that level, from that support level, and now making reach the 50% level of that smaller Fibonacci range. On the daily, you can see there it's bounced off that support, and on that wider Fibonacci range it's bounced down from the 31% or midpoint between the 23 and the 38% Fibonacci levels. Next we've got the US, or the United States Natural Gas Fund. It's a ticker UNG. Again, you'll notice on the weekly the CCI 400 is still below its moving averages, so still somewhat bearish, although making a bit of a retrace to the upside. On the daily, it's actually broken above the moving average on the CCI 400, and the CCI 150 likewise is in a continuous uptrend there, which is good. Notice also on the hourly that's still in a bullish mode as well. Now that's retraced past the 61% level of that smaller Fibonacci range, which is a positive, I guess. Anything that breaks above 61 or break the 61% barrier generally can mean a continuation in that direction, or it can actually, if it bounces from there, then you might see a bit of a retrace to the downside. In this case it's broken up, but do notice there is a bearish divergence there. It's not really divergence, that's almost reaching a bit of a wedge there, but won't count that as a divergence quite yet unless that breaks higher on the price. Next we've got the ProShares Ultra Short Bloomberg Natural Gas, ticker code KOLD, and you can see here on the weekly somewhat neutral on the CCI 400, no divergence to talk of on the CCI 150. The daily chart is broken below its moving averages, and that's a bearish outlook, and likewise on the CCI 150 it's still continuing in the downtrend. But notice here as well on its Fibonacci range it's just penetrated through the 61%, and it looks like it may bounce off that level, and that's always a key area, as I said. But or it could continue to the downside. Now looking at the hourly chart, again that's showing pretty much a bearish momentum, no sign of a reversal. There is no divergence yet on the 150, and likewise on that Fibonacci range you can see there it's broken below the 61%, same as the daily. That's pretty much the daily range. So that's where we are at the moment. So again, just looking at the some reasons why the natural gas price may go up or down. With the supply side, with global LNG exports impacting on domestic supply, production levels have an impact, also storage levels. Likewise, demand method is also impacted by weather patterns, industrial demand, and competition from renewables. In terms of other factors, we've got geopolitical risks such as the Ukraine war, and international trade and sanctions can have an impact on it as well. Likewise, economic growth is impacted with strong growth potential for increased energy demand, or global slowdowns with a potential decrease in demand on gas prices. So if you got value out of the video, hit that like and subscribe button, hit that notification bell. Thanks for watching, and see you in a future video.